Market slipping below the 3,000 mark yesterday. Let's take a look at the role psychological levels play in the current market climate. Is there a role for psychological levels to play right now?
Well, Alicia, yes, the 3,000 level, it was one of those psychological levels that we did not expect the market to come below. Of course, it's now below that level. And investors are just saying in the market that we may see the market even maybe go a bit lower, but you may see the market start picking up activity towards the end of this particular quarter. And definitely, by the end of the quarter, we should see the market above 3,000 levels, maybe between 3,100, 3,200 levels.
Let's take a look on and focus on the manufacturing arm of the country today. I mean, we've got the sector being severely punished by the power constraints that have persisted in the country. And for those who have been exporters, have been further hit by the strength we've seen filter through in the shilling itself. What's your outlook for this sector specifically as we anticipate a third quarter earnings?
Well, this sector, of course, as you mentioned, there's been quite a bit of challenges. At least with the power rationing, they are not affected because the government did not ration their power. But moving forward, the cost of power for them, of course, is going to be pretty expensive. We're trying to, the government is using quite a bit of thermal generated power, which is much more expensive. And so the cost of power for them will be pretty expensive. Again, consumers do not have as much disposable income to be able to consume some of the products that we are seeing coming out. The cost of raw materials have been going upwards. I mean, if you just look at a counter like East African breweries, they just raised the cost of their drinks, the premium drinks, by around 5 shillings, 10 shillings for most of them. And this is just in realization of the cost pressure that they're facing. So going into the quarter, when they're announcing their half-year results, we may see the results not being as good. But then it's good to mention that last year was also not a very good year for them because the costs were extremely high, especially because of the cost of oil commodities, the cost of power, the inflation was still there. So it will be a combination of two factors. They'll not report very good earnings, but because of the low base effects of next year, they may look like they're performing pretty well, but of course not at their optimum levels.
Of course, looking at Unga a couple of weeks ago, it was one of the latest companies to report, and certainly those numbers reflecting quite a bit of strain. They've cited, as you say, high input costs on the one hand, the other is the forex moves that we've seen. So what's your outlook for that company specifically, because it's a company that we don't often look at?
Well, yes, again, as you put it, people don't look at it so much. But again, just like all the other counters in the manufacturing sector, they're going to be affected, of course, by the movement of the shilling. If you see the shilling strengthening further, that may affect some of their exports that they usually make out there. But then again, the outlook for the shilling is not to be to move to levels of 70 shillings, but you may see the shilling weakening to around levels of 77, 78 levels. Again, as far as costs are concerned, we may see them suffering from that perspective because electricity for them is also a humongous cost. And so there may be a bit of a problem there, but with the short trains expected to come in, we may see that trying to help them because the thermal generated power that you're using at the moment may not continue persisting towards till the end of the year, but that may start slowing down and so reducing the cost of power. And so, I mean, a bit hard to call, but I guess they shouldn't be that badly off.
Let's flip the coin slightly here. We've got KenGen itself, while still trying to enhance its production capacity. It lost close to 2% in Friday's trade. It was one of the most highly active stocks in yesterday's trading session. And this all coming to the fore before its full year profit announcement. The company is, of course, looking to publish those results to the end of June by the end of this month. And many are anticipating that the earnings growth could be lower because operational costs themselves have gone up. What's your outlook on that front? What are you anticipating?
Well, as you've rightly put it, KenGen may not perform as well as it did last year. Of course, the generation, most of the generation capacity comes from hydroelectricity, and hydroelectricity has really suffered because of the drought that we are experiencing in the country this particular year. And so when they announce their results, they'll definitely be much lower than they were the previous year. And it's just because of that. I mean, the costs are just too high, and of course they're not able to generate as much as they were generating previously. And so our expectation is that it may not report as good earnings as it did last year.
Despite that, just looking at KenGen, I mean, we know that it had a very successful bond issue recently, and it's hyped up plans in terms of expansion and being able to enhance its production capacity moving forward. Would you be buying into KenGen right now?
Well, if they're able to roll out the plans that they've indicated they want to roll out after they get the funding, which already they've gotten the funding, I think KenGen will be a very good counter going into the future. Of course, they want to do a bit of hydro-generated projects, and they want to get also into geothermal power. If they're able to put that into place, then KenGen is definitely a very attractive counter to be participating in at the moment. But that is all hinged on them being able to put those plans that they have into operation within the timelines that they've indicated in their prospectus document.